Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for Monday night, April 26, 2021, 6:45 p.m. Central Time. That's a whole mouthful that I have to memorize each time. I did not put out your weekly updates this week. I was studying and am studying for a securities exam this Thursday, and after that I'll be back to normal this weekend, but I needed the time and I wanted to clean my brain out. Did I put out my updates, though, for my paid subscribers? You can count on it. They had them right on time, right when I said they would. I really pay attention to that. This is the freebies. So as you look at the market, you're still up, but you got the two-day FOMC meeting starting tomorrow, ending on Wednesday with the monetary policy in addition to the press conference. Traders will look for one clue. When is the Fed going to start tapering? That will be it. Remember, the Fed's told us they're going to stop bond buying purchases or taper them back before they raise interest rates. So we know the key. Now we're looking to see, do they give us anything? I expect nothing at this meeting. So we'll see what that does. Then you have the other monster, GDP. The market is looking for growth near 7%, so that's a pretty big number too. If you get that growth and you stay in those numbers, isn't it just a matter of when interest rates go up? And then the question is, at what point do higher interest rates negatively impact the market? I did a piece today on TikTok for Bloomberg just about that subject. So if you look at that, you can listen to it. Metal markets, holding. That's about the best word I could say with one exception. Actually, there's three exceptions to it. There's the copper, the platinum, and the palladium markets, off to the races. Gold and silver languishing, not acting bad, just languishing. Energy markets are going to wait for the API report tomorrow and EIA report on Wednesday. So when we look at the S&P, what can I tell you? You're at an all-time high. What more do you want from the market? It just keeps doing it. So anyone that gets nervous about it, I get it. Every trader that I watch there, and we watch TV, I'm no different than you. Oh, it's looking toppy, it's looking this, it's that. Now, I see that too. Don't play that. Play the chart, not what you think. If you play what you think, you didn't catch any of these moves. If you take a look at where the market's at, we're in a distribution area. Do you see that? Come on. It's not that hard to see. You've been languishing here. Is that the right word? Or just hanging out here? I don't know which one. Just for about a week and a half now. Just back and forth, going through that. The market has a pattern on the swing line study. This is the same chart without the swing lines, okay? When I put them on, it's so easy to see it. I mean, if I brought a 13-year-old in here, you have higher lows, you got higher highs, that's an uptrend. What breaks the trend? Getting underneath that low right over there. Where's the market in relation to the 18-day average of closes? Because I want a bias number. So I pick the 18-day. You might pick another number. You know, nobody walks on water around here. But I do think you need a number so that it filters other indicators. So when the market has got itself over the 18-day, I say it's got upside bias. The swing line is up. Should the market break back at 41.2440, I don't think it takes out this low right here. Let's just double check it. That's 41.1050. So breaks can be handled very nicely by the market down to there. Tonight coming up to 41.84 is a high, and the high on Monday was 41.86. So as long as you don't take out 41.86 and you wanted to back off, that'd be fine. No problem there. Moving averages are bullish. The slow stochastic reading is telling you that you have resistance now coming to meet the market. The slope has changed. It's dropping down, and that's because of this sideways action that the market had. This action is causing the swing lines, the Bollinger Bands to narrow in. So now the resistance is 42.18.5, and I'll repeat what I said. The first challenge of an upper Bollinger Band or a lower one is where pros often take money off the table. You have an embedded reading, or do you? Let's go to this. You lost the reading on Thursday. Do you agree? If you come back the day before, both the red and the blue numbers, well, they were both over the 80 level. You lose it on Thursday, and then the very next day you gained it back, and that's what I teach. The only time you can get it back is the next day. Now, if you lost it again, it's probably going to stay lost, but that's rare. You get it back, the market often tries to make a test. And that's what it's doing right now, as you can see, trying to figure out what to do from here. It stayed embedded. As long as that's in place, here's the chart action. Slow stochastic embedded, the bias up since you're over the 18-day average, swing line up, target 42.18.5, support 41.24.40. You'd have to lose again that red line under 79 for me to say it's lost its bullishness, okay? It's rare it gains it back that way, but it does happen, and you always look at that. In the Nasdaq, this is more common. You have an embedded reading, you lose it, and it stays lost. That is the typical action in the market. And when that happens, you're trying to make a challenge of the 18-day average of closes. The market has been fighting that. Did it clear this high back here? And I want to come to that because that's an important number. That high was 14,059.50. This rally so far has not cleared that number. So this is still a very live 18-day average of close objective. Take that out and it throws the pattern out the window. And I've done years of research on that and I'm comfortable making that statement. The resistance is higher up at 14,189. You're overbought in an uptrend with still a downside target that is live. That does not mean you're bearish. It means that I doubt that if you were sitting next to me and you were giving me that elbow, should we be buying Ira? I would be telling you, no. Are we bearish? No. We wait. When you come to the Dow, same thing. You lost the setup. And you can see, you lose it. The next day you gained it back. This is so important for you to see. And then if you lose it again, you generally don't get it back right away. And that's exactly what occurred there. So there's a skill in looking at that, but you get it pretty fast in the importance of it. Also, this market only one time here and here hit the upper Bollinger Band. It then distributed itself and it's sort of drifting. But it's drifting with upside bias. It's overbought. The swing line is pointing down. I don't see a thing to do there. I said there was a rotation in the markets today that's taking place, and there is. The rotation has been into the Nasdaq and into the Russell. And you can see the Russell's up here. It's not making all-time highs like the S&P just did, but there's a rotation into it. Where should it fail? Right now, right here. You're overbought. You're back to the Bollinger Band. You hit it for the first time. I'll show you. You didn't hit it on Friday. You hit it today. That's where I think the pros took their money off the table and said, I'm out. Now, you might say, well, I think that's going to be a base and run higher. I can't argue that. But playing for that to be the key, that's the low risk bet. That's the high risk bet. The low risk is doing what I just told you because you fail so often there. Look at how this VIX is just narrowing in more and more. Something big is going to happen. Whenever it just keeps narrowing in, and it can go sideways for a very long time, it ultimately leads to something. Now, when we did that before, we had these spikes to the upside. I'm not saying that'll be the case. I'm just saying something's brewing in it. In the 30-year bonds, you are overbought. Or are you embedded? Well, let's not count tonight. Both numbers over 80, not over 80 on Friday. You can see that. Or the day before. No, you're plain overbought in the market. I don't want to have a 90 up there. It's by accident. I didn't do the scale right. I wouldn't be surprised if you want to head back to the 18-day average of closes and be neutral going into the FOMC and the GDP numbers. You started doing that in the 10-year note. Notice how the market's backing off. There was one shot to get out really nice up here if people were long, if they were long, and you haven't hit that since then. So I see it just drifting. Dollar index still fully embedded bearish. Lower highs, lower lows. So it had been fighting to hold the 100-day average with the Bollinger Band. It sank under it Friday, followed through now. So it wouldn't surprise me that when we open, if you're going to get a rally, that acts as a bit of a resistance point. On any further break, 90.47, downside target. Eurocurrency to the upside, fully embedded. What does that mean? I'm looking for the resistance. That combination, it's the flip-flop of the dollar. You can see what it's doing right here. And now the question is, can it use this as a launching pad to get back up and make a higher high? That's what I'll be looking at. British pound, this whole move down is a correction in a market that still has upside bias, and it is corrected an overbought condition. Market still non-trade, as I call it right there. Bitcoin. What do you do when you hit a Bollinger Band? I know what you're going to tell me. Oh, come on, Ira. 52,860. Look where it went. And I agree. It went to 47,440, and now it's come right back. But were you quick enough? I don't know. You don't stay under that number very long. And it's still in a downtrend. It is not in an uptrend. To negate the market's downtrend, you've got to get this market up and over 57,160. You haven't done that just yet. You corrected an oversold condition with a market down, bias down. Bears are still in control. Brent versus WTI crude. Last week, before I didn't do anything over the weekend, we were talking. We were up over here. If I come back, this is Thursday. This is when we did it, pushing that $4 level. Okay, you've fallen back a little bit. The news about India has gotten worse, and that certainly impacts the Brent oil more than the WTI. But what you've really done is fallen back from the upper Bollinger Band resistance, lost the overbought condition, went back to the 18-day average, and this is called regrouping. That's exactly what the market's doing. There is no trend. The swing line's down, the bias up, and you're working on getting out of overbought. WTI, same exact picture. Had your shots to come out, and then bang, right back to that 18-day average. Gasoline, you know that I'm ultimately friendly to this market. I'm viewing this whole action is a potential base. The reason I'm committing to that, I believe the driving's going to go crazy. I'm already seeing gasoline is soaring in different spots, and I don't think that'll stop anybody from doing anything. So you put it all together, that's the game plan you have, and what I do each morning is I work with you on that. Each morning at 5:40, I put out a video. I start recording it at 5:40. It's out typically 6:15 to 6:30 in the morning. About 20 minutes long. I'm going to review all the different sectors of the futures markets. I'm going to throw out the news of the day at that hour, so you're going to be brought up right away. Was there anything in Europe or Asia that is going to impact the market? What are the reports coming out in the U.S.? What is the market looking for in those reports? You have this all before all this information typically comes out, and a full review of the charts where I'm actually saying, I want you to buy here, buy at the market, buy at a price, here's the stop, or I want you out if it closes under a certain number, here's your profit objectives. I can't be more specific than I am in this. So if you're a serious futures trader, I think this might be something you should look at. Just go to our website. If you go under the word education, I have courses there, and research, I have this information there. Look at both sides. I'm Ira. Have a great night.